Scott Adair from the New York State Society of CPAs. Thanks so much for being with us.
Thanks for having us, Allison.
Talking about tax credits that can help you when you're in college. So first of all, what kind of credits are we talking about that can lower college costs?
So we're really looking at two tax credits in one savings program, actually. The American Opportunities Tax Credit for college students, as well as the Lifetime Learning Tax Credit, in addition to 529 savings plans.
So let's start with the American Opportunities Tax Credit. What exactly is it, and how does it work?
So the American Opportunities Tax Credit allows for a $2,500 tax credit, which is a lowering of your liability on your income tax return each year.
And are there any restrictions on that?
So the restrictions are, it has to be for somebody that it's either you, your spouse, or a dependent child that's claimed on your income tax return.
So I'm figuring there has to be a tax credit for graduate students as well. It can't just be undergrads, because to clarify, that is just for undergraduate students.
Correct. The American Opportunities Tax Credit is just for undergrads, and then we do have the Lifetime Learning Tax Credit that is for graduate students, and that's a $2,000 tax credit. For people that are eligible would be a graduate student, undergraduate student is also eligible for that, or someone who's taking a class just for educational purposes for their job.
So aside from the differences in those two taxes just being for different students, what are some of the other differences between them?
So some of the major difference is where it kicks in on your income tax return. And on the American Opportunities Credit, the limit to get the full credit is $160,000, where on the Lifetime Learning Credit, that income limit for a married filing jointly couple is $110,000. So different income levels depending on how you can do that. Also, the program is slightly different depending on what type of expenses that you're looking to get reimbursed for or the tax credit for.
Can the two tax credits be taken at the same time?
Great question. They cannot be taken at the same time. You can one or the other for each year.
Of course. Never works that way, right?
Exactly.
When we want it to.
Exactly.
And then what is the 529 college savings plan? I know you wanted to talk about that. And how does it work?
Yeah, so the 529 college savings plans are pretty much across the country, but we do hear pretty prevalently about them here in New York State, where it allows people to put money away after taxes that can earn interest and dividends on those dollars that would then become tax-free when used to pay for educational expenses.
All right, great, Scott. Anything else you wanted to add?
Just pre-planning, 529 savings plan is the thing to go with. As you're getting into those college years or getting into paying for upper education expenses, look towards those tax credits to help save your money on the tax bill.
All right, thanks so much, Scott. Certainly a lot of people thinking about that now as they get ready to head off to college themselves.
Absolutely.
So